Dwani, a partner, moderate this webcast for the next 16 minutes. When I'm not focusing on emerging tech and the risk it brings to our clients, you'll find me training with my 2 daughters for these Spartan obstacle course races. My 17-year-old daughter and I finished our second trifecta for 2021 earlier this month, and we are now trying to convince my wife for 3 more races in the next 6 weeks. When I think about the crypto economy and these Spartan races, there's a lot in common. There's a need for training, a need for long-term strategy, the ability to understand challenges and obstacles in our way and how to most efficiently get around them. Though I will admit that the penalties for not being able to navigate obstacles in the crypto economy are far greater than most races. I have my daughter as my teammate in those races, and today I'm joined by another great team of panelists to help discuss this topic. We've seen a lot of excitement in the crypto economy in the past few weeks with the ProShares ETF news launch earlier this week, the El Salvador legal tender launch a few months ago, as well as a lot of enforcement from SEC and comments from various regulators. So this is a very, very timely discussion. We've structured the next 60 minutes as a fireside chat discussion where 4 of my team members and I will discuss and engage in a conversation around these challenges. As with most webinar type disclosures, the comments represent our views and not the views of the organizations we represent. There'll be a Q&A session towards the end of the discussion where I'll group the questions received from you into themes and we'll talk about these topics. If you'd like to ask a question, you can do so via the chat control panel, most likely on the right-hand side of your Zoom session. And if you have any technical difficulties, feel free to enter it there and one of us may try and help you out. With that, I'm pleased to have our panelists introduce ourselves. So maybe let's start with Scott. If you wouldn't mind just getting yourself on mute and quick introduction.
Oh yeah, I'm happy to be here and thank you for having us on today. My name is Scott Conger. I serve as the mayor of the city of Jackson, Tennessee, which is a city of population about 68,000, located directly between Memphis and Nashville, Tennessee. I've been mayor for roughly over 2 years now, and through the pandemic of looking at trends and changes and planning for the future, got interested and involved in how Bitcoin and crypto adoption at the local level. And trying to make some of those changes to better position our city for long-term sustainability into the future. And they're really looking forward to the conversation. I have 2 kids. Mine are not training for Spartan races yet. They are. My daughter is 5 in kindergarten, son is 3, and they think they're Spartans right now. But it's most of my time away from work and future planning for our city is with my wife and 2 kids.
That's awesome. Thanks, Scott. Just so I get it right, for the rest of the conference, Scott, Mayor, any preference? Okay.
Titles are only good for business cards.
Excellent. Moish, can I just bring you in and ask you to go next?
Yeah, sure. Hi, everyone. Happy to be here. My name is Moish Levin. I'm the VP product of GK8. We are a technology provider that offer a very secure end-to-end custody solution for managing blockchain-based assets. Our clients are banks, exchange that together manage more than $10 billion in digital assets. And I'm also a family man. I have a kid and I'm expecting in December. And very happy to be here today.
Congratulations, Moish. And last but not the least, Sadie.
Thank you.
Hi, Vikram. Thank you so much for having me. I'm excited to be here today. My name is Sadie Rainey. I have been working in the crypto space for full-time for the past 4 years. I'm CEO and co-founder of Strix Leviathan, which is an algorithmically traded hedge fund that trades solely in digital assets. We launched that first company in January of 2018. Earlier this year, I also co-founded a company called Makara, which received its SEC registration to be the first robo-advisor for crypto in March of this year, and we opened it to the public this summer. I'm also a mom, and I have a 9-year-old and a 10-year-old.
That's awesome, Sadie. And I've always joked about that in the digital asset space. It's almost like dog years. So the fact that you've been here for 4 years, that's tons of experience for sure.
Yes, it feels like 4 decades.
So maybe let's, Sadie, start with you. And this whole topic of digital assets and the fundamental technology of blockchain, it's one of those things where it is clearly dividing. If you speak to people, you'll find people who believe it's the answer to all problems. Others believe it's an answer looking for a problem. Some believe digital assets is the best thing since sliced bread, and others, it's one of the biggest risks to financial systems. In your role, how do you think about the technology? Is it still immature from a scalability, security, usability, and this digital assets use case? How do you think about it when you got into this industry?
So I wouldn't say that it's immature. I would definitely say that it's still very young. There is so much room to grow in this industry, and just the amount of change that I have seen since I started 4 years ago is kind of shocking. There were very few different protocols when I started. Custody was still just a giant question. Nobody really knew how to tackle that. Data rights and identity and all the implications of blockchain in that regard were very hot topics then, with not as many solutions. And the amount that I've seen it grow in the last 4 years is really exciting. But again, still very early days. At Macaro, we always say it's not too late to be early, because we get that question all the time. Have I missed the boat? Is it too late? And the answer is absolutely not. But as you mentioned, security, there's still a lot of risks out there. These markets are young and people are still learning about them. So there's a huge education curve for people. And there's a lot of risk still out there in the space as it grows and it learns and it makes mistakes. So in a way, it's maturing, but I'd say it's still very young.
No, that's awesome, Sadie. And you touched upon a couple of things, the around of security, which I think we'll have a good amount of conversation with Moish, and also touched upon custody. And obviously, one of the aspects around custody that's been floating around is what is a custodian and the concept of a regulated custodian. And, on that theme of regulation, there's a lot that's happening around regulation, around the country as well as the globe. So Scott, maybe if I can bring you in here, is this technology running into the systems of laws and regulation that govern society? What do you think about it from your
running right into it full force? Sadie's been in the space for 4 years. I remember 4 years ago, roughly, someone came to our Rotary Club and was speaking about Bitcoin and blockchain. I thought, this is Star Trek stuff. I don't know what's going on here, but it's something I think is taken off, and regulation is an issue. I think adoption comes from the ground up, will come from especially the governmental level, the local level up. But I think the regulatory piece has to be state and federal, and there has to be some cooperation between the three levels of government to do that. For example, in Tennessee now, we're working on trying to get some state legislation to allow us to hold crypto on our balance sheets. It's very explicit on what we can hold as far as our investments go. Crypto and Bitcoin is not one of them. And so we're working on that as well. How do we welcome this? How do we utilize and regulate smartly? I think it flies in the face a lot because it's a great equalizer. And I think that scares a lot of people, that there is virtually no barrier to entry to get into cryptocurrency and that wealth building opportunity that comes along with it. 86% of Americans, is my family there, has a smartphone. And so that is the only barrier right there. And so most of our country, especially in the United States, has an opportunity to be connected to some sort of, whether it's an LTE service, a 5G service, broadband. There is an opportunity for that connectivity to get that wallet, to start that DCA. And so I think it scares a lot of people that have been used to being part of that wealth class, of traditional wealth class and wealth building. They don't know this space because it's new to virtually, to a lot of people. And so the pushback is there from those that are in the regulatory authority. You do have some champions in the Senate and Congress that are looking at ways to change that. Wyoming's been a trailblazer. And so I think there has to be that partnership. We have great partnerships with our senators here that are on some of those task forces in Tennessee to look at that and how we can walk along with the technology to provide that opportunity for it to prosper and to see the full potential of it.
Now, that's a great way of sort of capturing the whole partnership that needs to happen, because you used the phrase the great equalizer and low barriers of entry. And that was truly the promise of this technology when the first white paper was created back in 8 or 9. Sadie, if I may just ask for your views on when you were dealing with the SEC registration, and how do you think about it from a regulator's perspective? Do you see this partnership play out, and where would you like the regulators to go?
So I personally was quite happy yesterday with the SEC decision on the Bitcoin ETF. Even though it's a futures ETF, it's a step in the right direction. The SEC has been very thoughtful in their approach. And, if anything, yesterday kind of silenced some of the naysayers who just said that the SEC is out to get digital currency and the government's going to shut it down. And I think the SEC is doing exactly what it's supposed to be doing. It's protecting investors. As Scott mentioned, there's direct access to these assets, which means in a lot of situations, there's no protection in these assets. We compare it a lot to liquid angel investing, but there's just no layers in between the investors and the assets. So if people aren't equipped to evaluate them or understand what they need to do to keep their investments secure, then they're vulnerable, and that's what the SEC is there to protect. I want them protecting my friends and family just as much as anyone else. There's definitely a reputation in this industry that we're trying to get around regulation. I think we're slowly bringing that or taking that reputation down, but over, it's going to take a lot of time. And again, the ETF yesterday was a really big move, really positive move, mostly because it's getting people talking about Bitcoin and what it means. And it does show that the regulators are being thoughtful, and that's as much as we can ask for right now.
I think to your point, Sadie, it's a great first step. And if we with the nimbleness and flexibility of this space, it's hard to kind of put your mind around how slow government moves. In reality, government doesn't react fast to anything. I mean, from a local level is a frustration on my point. I can imagine the frustration at a federal level on how slow government moves to react. Hardly ever proactive. It's a slow reaction to things, and it just takes patience to be a part of that process.
No, appreciate those comments. I mean, it's one of those where it's a tough thing to regulate, just given the great equalizer and cross-border nature of things. And I'm sure, everyone from a regulator perspective doesn't want to hold back innovation, but at the same time offer some of the protections that Sadie spoke about. And Moish, to maybe bring you into this conversation, we spoke a little bit about low barriers of entry, having access to a cell phone, direct access to the assets. I know I've lost my cell phones in the past. I've left them at places I probably shouldn't. So from your vantage point, what are some of the security risks and challenges with cryptocurrencies?
Well, sure. The blockchain itself, as we know, is a very secured place, but we are exposed anytime we are doing any interaction with the blockchain. Actions like withdrawal and deposit need to sign by your private key. So the name of the game is to keep your private key secured. We have a saying, not your keys, not your coins. So there's several solutions out there in order to make sure to keep your coins. We're experts in what we call a cold solution. It's mean keeping your keys completely air-gapped, not connected to the internet in any way, because we need to understand that anything that is connected to the internet is exposed in some way. And the hacking business, and we have a little bit experience on that is ROI business. If you will invest enough money in hacking something that is online, you will be able to succeed. So the key here is to make sure that you don't have any attack vectors. And this is one of the solutions that we have. Another thing that we need to consider is all the DeFi risk that we have. So people that are writing smart contracts, we not necessarily know who is writing the smart contract. So we need to make sure that we do some kind of validation. My point of view is mostly from an institution level, because we are working with banks and exchanges, less with and consumer, but this is true for everyone. The key is to keep your keys secured.
Who guards the guards? And I mean, Moish, just to sort of add on to that, I mean, you spoke about attack vectors and hacking, and especially in this era of, state-sponsored cyber attacks, is this almost inevitable that you're gonna lose your keys and people are gonna take coins away from your wallet? How should people on this webinar be able to think about that?
Well, there's a lot of actions that people can do. We are also educating the people that helping the end consumers. So there's a lot of protocols of KYC, know your client, and we want to make sure that all the players that handling the money has the right policies. So for example, not every bankers can move a certain amount of money to a certain destination class in a certain time. So we have a layer of user management and policy to keep track of who doing what in what institution. So we are fighting that battle from the bank perspective, and we're doing quite a good job currently, and we hope to consider. And again, from the end user perspective, you just need to know to keep your keys in a very secure place and to double check before you're doing any action.
So what you're effectively telling me is, if Sadie tells me the location of her keys, that's not a good security move at this point.
I would count on Sadie, but only this time.
No, and that's an interesting thing, because you spoke about that in some ways, the users, it's the buyer beware mindset that they have to have some controls on their end. And maybe Sadie, I can ask you, and Moish, maybe for you to comment on, what are some of the controls and safeguards the ecosystem participants have to put into place? How should they think about how they secure these keys? Because when you were describing it, the mental image that came in my mind was almost like a bearer bond. He who controls the bearer bond can claim to be the owner of the bearer bond. And I know, dating myself, we used to use vaults and a whole bunch of Ps to secure bearer bonds. So any insights or recommendations or guidance for how people should think about these controls?
Sadie, you want to take this?
From our perspective, custody is hugely important. And again, keys are incredibly important, and just security procedures. I think my answer would probably be a lot different than, Moish's, just from like an individual perspective. But from us, we're safeguarding other people's assets, so it's extremely critical for us. And we do everything anyone in a normal industry would do, background checks on them and business controls, constantly looking at who has access to what and making sure that there's redundancies everywhere. But when it comes down to, at the end of the day, is protecting your keys, and not your keys, not your crypto. But if you're using a custodian, also, you can't just blindly trust anyone. What are their protocols? What are their procedures? How are they moving? How are they allowing people to move assets in and out? There's just a lot of questions that you have to ask, and you have to be gutsy. You have to go in there, and you're not most people aren't going to understand the answers that you're getting. So you just have to keep digging and make sure that you feel comfortable and you understand, and talk to somebody who understands what those protocols are and what those procedures are, because if you don't know, at the end of the day, you don't actually know if you're protected.
I know that's awesome, Sadie. It's one of those areas where you have to keep running just to stay stationary. There's so much new coming at you every day, and this inquisitive mindset is definitely important. Scott, maybe just to bring you in again from a regulatory perspective for just a second, and we touched upon custody, we touched upon regulators and their mindsets and the way they think about it. Do you ever think that the government can stop the growth of cryptocurrencies? I mean, how should, there is almost this eternal fear of somebody says it's banned. We keep hearing about, certain countries banning cryptocurrency. How do you think about that piece of it?
I'm going to get very basic here. God bless America. The will of the people is not going to be stopped by someone in a government office saying we're going to ban it. I just don't think that's possible. There's too many opportunities. I don't think there's any will. There may be some. I don't know. I'm not going to speak for any of our elected representatives in Washington, but I think the vast majority of them understand the opportunity not only of cryptocurrency but the blockchain technology itself. And just how to utilize it, I think, is really going to be the big hurdle. Not necessarily any position to block it, any position to prevent it, but how to utilize it the best of its ability. We've actually talked locally here. What does that look like in the future for us? Smart contracts. How does it make it easier, more secure for us to send and utilize that? Down the road, we're nowhere near that, but what that can look like at a local level. But yeah, I don't foresee that at all. I will be very surprised, if that ever happens in the United States.
Yeah. And Scott, you spoke about the opportunities and looking at it from a local level. I've often read about this, the country of Estonia. I'm sure you've heard about this as well. They very long ago made the decision of, call it, excess of 90% of all the interactions with its citizen will be through a digital mechanism. And if you look at their X platform, they've leveraged some of these blockchain technologies to digitize their mechanisms, and they are coming with some fascinating use cases on records management and quite a few interesting things. So definitely a lot to evolve here.
Yeah, I think that's where it has to go, right? I mean, for us, you look at law enforcement side of it, we have records that we have to keep forever. And the lifespan of some records are 100 years that we have to keep. And so physically keeping those becomes cumbersome because you run out of physical space, and we have to look for more space. But how does that look going forward? And there's so many people that, answering a phone, calling a phone, finding out, people would rather go online and find things out. So you have to touch people in multiple aspects, whether it be digitally. Now there's still some aspect of that personal touch, but that digital touch becomes more and more crucial as we go forward.
Nope, appreciate that. And I think, maybe Moish, your point of view, keep hearing about cyber attacks, keep hearing about stolen Bitcoins, keep hearing about not remembering passwords. Can you ever recover a stolen Bitcoin? Can it be sort of traced back to me? Just your insights on how would you think about it from a security professional's perspective?
Well, the short answer is no. You can't recover your Bitcoin. I mean, I know about cases, maybe you heard in the news, that the hacker will return the stolen money, but I wouldn't count on it. Our assumption that even if there's companies there that say that they can, be like a detective or headhunters or find your lost money, our assumption is that it's an irreversible protocol. And with this assumption, we are going to work every day. So what we do have is cybersecurity, and we also have insurance. So like any other assets that is getting stolen, you will get, as a bank, as an institution that want to protect his own clients, there's an insurance. And of course, the more secure the technology that you have, the better insurance that you will get from the insurance company. So it goes hand by hand. And also there's the bank itself, except of the blockchain layer, there's the applicable layer, application level. So there's a lot of user management policy. For one example, most of the platform using Rabac, which is a role-based access control system. So you check who is doing the action in the bank, what is his role, what is his permission, to where he's moving the money. And then there's another layer of maybe approval or C-level even that need to approve some of the actions. I know there's companies that are doing a lot of AML, anti-money laundering activities, so we can know if there's a bad actor out there. We have a database that is getting bigger and bigger. So there's a lot of things that we can do. But going back to your question, the assumption is that we cannot retrieve the assets.
No, that's impressive. And this might be another one where I'll just probably take one of the questions that's come through. For effective KYC, AML, or for being able to trace transactions, and these transactions have been growing, it's an add-only ledger because you can't reverse these transactions. Is there a need to visualize data in a different format? And does the blockchain layer come up with native visualization technologies, or are there companies that sort of help you interrogate the data so you're able to make sense? Because as an investor, I don't want to buy a coin that was part of a hack recently. So how do I think about those visualization pieces, analytics companies? Any insights from you, Moish?
Of course. So the regulation already help us starting to work with a database of, let's call it bad behavior addresses. And every time you're doing an action, just before you send transaction or receive transaction, we use this API to contact this database and ask if this is a good address or a bad address, to make sure that the money is not, getting dirty with institution that we don't want it to be assigned to. And I know about a few companies that do that. We actually partner with a few of them. And this is the way to fight this angle.
Appreciate that. And Sadie, as an investor, do you rely on sort of custodians to be able to run these types of checks on your behalf to confirm that you're not tripping the law in some ways, not sending money to countries where you shouldn't be sending, or not buying coins that are tainted? How do you as an investor think about it?
So for us, we don't just rely on our vendors and service providers to do that. We do have, for both businesses, we do have service providers that do that for us, but we made the internal decision that we were also going to build in our own layer of verification. So as Moish said, there's API connectivity that you can have to all the various sanctions lists, and we have that incorporated into the platform that we built. Because you don't want to be trading in coins that have been, in a recent hack, or you don't want to be interacting with a wallet that you shouldn't be. A lot of this stuff is all still really new. And so, what do you do if you have a wallet that's on a list from, 30 transactions ago? And, for that, you have to work, with your service providers to decide what to do. But we don't just rely on the service providers to do that for us. We feel like we need to add an extra layer on our side for protection.
No, and I think that same mindset of having a dual layer, one at the organization level and one at service providers, is something we've seen as well. And the data visualization opportunities, at least my personal view on this one, is the easier you make it for the user to visualize when the coin was minted to when you're inheriting, and the chain of custody from that point onwards being loosely spoken, and red flags along the way, that's going to help effective decision making. Because if you are one step away versus 45 steps away, the answer could be completely different in your risk profile there. So there's definitely some companies that specialize in it, and opportunities for others to add more value here as well. And Sadie, adding on to just maybe a couple of questions for you directionally, is we've been talking all these challenges, reg, security, from your vantage point as an investor, one of the things that I have always wondered is on any given day, you've got whatever, 6,000, 9,000 coins. How do you think about, everyone is propagating to be the best and the brightest, and it's not an investment advice or an ask for investment advice, but how do you separate the noise from the real piece? And are there other challenges in this ecosystem that everybody should be thinking about?
Yeah, great question. So I'll actually kind of take this from the macro level down to the individual level and answer kind of on my own behalf as an individual. These assets are so confusing. This industry is so confusing. What it all boils down to right now is the biggest challenge that an everyday individual has is just understanding what in the world this is all about. I mean, they're all named the same thing. What's ETC versus ETH? I mean, we have horror stories of people who've frantically called us because they accidentally bought the wrong crypto and they don't know what to do with it and they don't know how to get rid of it. I mean, they don't understand, they're trying to download an app to buy crypto, and they download a custodial app and they don't understand why they can't buy crypto. And, people don't like to feel stupid, and these are super intelligent people. I mean, these are people who are doctors and lawyers and, really skilled worksmen, and they're super confused, and nobody likes to feel like that. Nobody wants to be the guy that accidentally bought the wrong thing and lost $2,000. I mean, that's the biggest challenge right now, is educating ourselves and figuring out where you can go learn and what resources you can use. And my advice to everybody is just bite size. Figure out one thing at a time, and it's going to confuse you. And every time you think you get it, you're going to read something else and you're going to go, oh, I have no idea. Maybe I don't know what this is about. And getting past that hurdle is hard for a lot of people. So, I just, every time somebody messages me and says, I get it, or, okay, so if this happens, then this happens, and they're correct. Like, you can see that spark of excitement, and that's really the biggest challenge right now to adoption, is just that it's confusing and nobody wants to feel confused.
Is the newest person in the space. Online reading is the most confusing thing, because depending on where you look, it's on complete polar opposite ends. And you have the fiat economists who say this space will never work. It's a fad. It's going away. And then I think what Sadie said, talking to people, having those conversations with people that you can trust, that you don't feel stupid around. To just say, hey, look, when I first, what app do I download? Where do I go? What do I do? What's the best way to do it? I think the education piece and the mindset piece of changing about, I'm for any of you read my Twitter, I'm anti-inflation. I don't like it. I think it's the government pumping money in is a great short-term fix, but it hurts us down the road. I had a conversation with someone who owns a local business here. We were talking about the mindset shift of US dollars to sats. And he owns a fencing company, lumber fencing, and said, this time last year, if I fast forward to this year, wood cost way more than it did in US dollars. But if I look at it in sats, it's so much cheaper. And so that guard against inflation of what the US dollar is doing in cryptocurrency, Bitcoin, especially now, we're looking at all-time highs today. That is where I come back to the great equalizer, the future. Ask the stupid questions. Don't be afraid to feel stupid, and get in here, because as the dollar continues to devalue every single day, this is going to be the solution to it.
No, great questions. And you spoke a little bit about the dollar. Any reactions on the digital dollar? Do you think we'll ever see that coming? I mean, there's been talk of central bank digital currencies and lots of experiments, and maybe I'll open it up to all the three of you. Any reactions on CBDCs? Don't just all jump in at once.
I defer to the more experienced ones first.
I personally think absolutely. I was actually shocked to hear Scott say that you have to keep some records for 100 years. It's just not sustainable. And, you know, one of the arguments that we hear all the time is the environmental argument against Bitcoin and Bitcoin mining. And the thing that I always ask, it's an unanswerable question, so it's a little bit unfair. But you know, when Bitcoin is mined, Bitcoin is created, and the transactions are all processed at the same time. And there's hundreds of transactions that are processed every single time Bitcoin is mined. And so from start to finish, that's the life cycle of creating crypto. And Bitcoin, of course, is an energy hog, so it's always held up as the example. But then you look at fiat currency, and if you want to really compare from start to finish, you've got to go with like machinery out in our natural resources, stripping them from the land and trucking them somewhere and processing them and printing dollars and stamping coins. And then every year we reprint millions of those. And like, that's not a sustainable cycle either. So, you know, I think I was listening to a podcast that the mayor did recently when he was talking about the how COVID forced the government to adopt technology at a pace that was just unheard of, and just record-breaking speeds for a very slow-moving entity. And you think about all the other organizations out there right now that had to do the exact same thing and had to adopt more digital methods. And I just don't see how governments cannot eventually end up with a central bank digital currency, because that's where everything is shifting. And I think traditional fiat printed money, I think it's just going to be impossible to sustain.
Yeah, I mean, it's definitely one of those where, you know, challenges getting into the ecosystem and thinking about our payment rails and how we pay for goods and services. You know, enough examples of I use Venmo to transfer things across. A digital dollar there could have a slightly different impact. And, you know, fintech organizations are helping serve the purpose and move this industry forward for sure.
I think the infrastructure for the end user is what's important for that digital dollar. It won't change the fact that they'll just produce more and more and more of it. There'll never be a finite supply. It'll just be an infinite supply of digital dollars. But to utilize, I mean, a lot of us have it now, but you get those small business owners, that infrastructure has to be secure, in place, and accessible for everyone to use it, because there's still places, even in cities, that don't accept debit cards, credit cards, any Apple Pay or anything like that. And so there has to be that infrastructure in place, but it still won't stop the aggressive production of dollars.
No, and the access to technology, I think that's exactly where the El Salvador thing comes in a country where less than 14% are banked. You've got 100% with cell phones, and can you have that infrastructure where everybody will be able to exchange value with each other? Thinking about just sort of moving on a little bit into another type of product in terms of getting into the ecosystem. So we briefly touched upon Bitcoins and cryptocurrencies as a broad basket of ways where people can get in. The evolution of digital dollars starting to come into play in some ways, are central bank digital currencies. We've heard a lot about secondary yield generation opportunities. We've heard about staking. We've heard about, you know, yield generation. Moish, from your vantage point, how does one think about these secondary opportunities, especially from a custody realm? Because if I'm how does it work? Would I lose my coins? Would I transfer my coin to someone if I'm giving it out to yield? How does the custody solution work when you're thinking about a secondary income generation piece?
I'm thinking about it exactly the same way as I'm thinking on every transaction or every correspondent with the blockchain. We're talking about DeFi and smart contracts. So again, I mentioned slightly the risk. We need to make sure who is writing the smart contract, because there's always the chance that they can create some kind of backdoor and steal all your money. So again, you need to make sure that you're interacting with a solid institute, and we will take care of all the rest in means of the correspondence with the blockchain itself. And also, I recommend all financial institutions to add another layer of policies around it. So who can do what in the organization? Now, here's a challenge, like any other challenge, where do you keep those policies? Even if you have like the best book of rules of who can do what, you need to make sure that you keep this policy, to keep the policies in a very safe place. Like I mentioned, the cold environment that is completely air-gapped and not connected to the internet is one place that I would recommend to put it. And again, there's a trade-off here between security and availability, because we keep talking here about the revolution, and now it's becoming mainstream, and we want to make sure that every security product that we put out of the market is also aligned with the business needs, to make sure there's a streamline of operation and we don't stop it in any way. So those are the real challenges that we encounter those days.
No, that's helpful. And Moish, you introduced this whole DeFi smart contract piece of it. Sadie, again, back to you, maybe as an investor perspective, how do you think about these DeFi networks, and how do you think about these yield generation opportunities? And do you ever dig into who's written these smart contracts? I mean, what kind of due diligence should folks be performing there?
So the more exotic the digital assets are getting, the more cautious people need to be. Thankfully, we have people like Moish out there who understand security that we can go to. But as an individual, I mean, these are super high risk activities. And, if you're curious, dabble in them. Nobody should be mortgaging their house or, selling their car to stake crypto. But, dabble in it, learn about it, ask your friends, but be very, very cautious. These are still such young assets. And 4 years ago, nobody had even heard of DeFi and yield farming. It was so futuristic, and it came so fast, and it's still evolving. So that's my advice to anyone, is be very, very cautious, start very, very small, trial and error, and read and talk to smart people.
No, and that's an important one, because we've seen some recent SEC enforcement around just that piece of it, in terms of whether it is truly doing the kinds of things it was claiming to do. So back to the protections, where right now regulations are evolving, which means you're going to have a mix of people with genuine solutions and people who think they have a genuine solution, but maybe tripping a tripwire. So doing that bit of research, understanding what the product is of paramount importance there. And Mayor, from your perspective, the city of Jackson, why does it want to be a crypto-friendly city? What's your view of how crypto could be used in your city and your sort of incentives there in terms of trying to vouch for this?
Well, I think in multiple ways, we're going to get there at some point. It benefits us to be on the frontier of it. What we're looking at just on what we can do, right? Until we get state statutes changed on what we can hold, how we can empower our employees. We have roughly 780 employees just with the city of Jackson. And so how can we open up that deferred compensation option for them? They have an IRA, they have their retirement. How can they diversify their portfolio into that crypto area? And so we're looking at that opportunity to, one, educate them on the space, get them a wallet open, and then allow them to utilize payroll deduction to just put in there in DCA every 2 weeks. And as we get into it and getting businesses and that education piece, if there is some opportunity that someone wants to pay property taxes in crypto, because we can't hold it on our balance sheet yet, we're looking at options, and this is probably several months away on if someone wants to pay in crypto they can pay to a third party immediately. It converts to USD and then comes to us. But for us, it just makes sense. We're in an area, we're the first gig city in Tennessee. Technology has been something that we have prided ourselves on, large industrial manufacturing economy here, but we're a prime for us for the gig economy. And so being open to that crypto adoption, Bitcoin adoption really opens the doors for us to utilize the existing infrastructure that we already have, to move into that 21st century economy that we're all going to get to eventually. It just makes it a lot easier if you're proactively moving there instead of being drug into it.
Yeah, and I mean, your vision is a pretty fascinating vision in terms of helping the 750 employees or 60 employees and thinking about how they can learn about this asset class and invest in this, and even in fact using payroll deductions. That's I'm hearing many corporates think about it the same way. So it is in many ways heartening to see that towns across the country and mayors across the country are thinking about it in the same way as well. So kudos to you and your team out there.
Oh, thank you. It's an exciting time. It's scary to some, but we're going to get there. And I think the sooner you get people involved, and even at this point of thinking that you're too far in the curve of the adoption curve, it's still way on the bottom here. So getting people involved now can really change their life, in 10, 20 years.
Yeah. If you wouldn't mind me asking, how did you and your team think about this? Because it's not a typical way of thinking about it. And, there are obviously barriers to try and get through to get to that level as your goal is. But how did you think about it, and how are you navigating your personal challenges there?
Oh, COVID does strange things to people. And, when you get into where you can't go many places and you start researching and jumping down rabbit holes and having those conversations, and, some local folks here that are very involved in the arena, and then having some very brief conversations with Mayor Suarez in Miami. And that's what started me thinking about what can we do. Jackson, Tennessee we're not near a beach. We're not near an ocean. We're not Miami, but what can we do that can benefit Jackson? And how can we really be that leader in, the Southeast outside of Florida? And just started things that were low barrier to entry. How can we start moving the ball, getting people talking about it, having the conversation, and then, start building from there. Start small on things that we can achieve easily. And I think that this payroll deduction piece for our employees is something we can achieve easily. We're working on creating the RFP for that now, and then getting that sent out so we can get a third-party company that can utilize that platform for our employees. And then once our employees start seeing the benefit of it, then those conversations happen in families, they happen in friend groups, and it goes out. And then so more people start talking about it. And then that adoption level at the grassroots, I think, really starts to take hold, at least in Jackson. And then if more areas start adopting, that's why I said earlier, the mass adoption is going to be at the local grassroots area level. The regulatory piece and the protection piece is going to have to be state and federal.
No, appreciate that. Thank you again for your leadership. And then, Sadie, when you started about the first robo-advisor dealing in digital assets and the various other companies, what were you thinking when getting into this asset class, and how did you navigate some of the challenges that this asset class presented?
So for us, the reason we got into Makara was because of individual investors. We launched Strix Leviathan, the hedge fund, in early 2018, and we've always been very compliance focused. Always, my background is in operations and finance. So, first order of business was get an auditor, get a third-party administrator, go through that list of things that we need to do to make sure that we're operating in as compliantly as possible. And we're limited to qualified purchasers due to regulations. So, my friends and relatives can't invest in the fund. They have to go out to some exchange and risk their money on an exchange where they don't have the same protections that we could offer. So again, nothing's guaranteed to be 100% safe, but they couldn't put their money with people that they trusted. So we about a year ago looked at our platform that we had built and worked with our compliance company and just said, how do we offer this to everybody? And they came back with a number of suggestions, but one of them was a robo-advisor for crypto. So we realized that our technology met all the requirements to do that. And so we selected a custodian to put the platform on. And that's why we launched it. And once we made that decision, it was just a no-brainer to get a registration with the SEC. And that doesn't say that the SEC endorses us or says we're better in any way than anyone else, but it does show that we've gone through a really long process to get through that regulatory hurdle, which should give people more comfort that we are focused on compliance. And so far, investors on the Makara platform are very pleased with what we offer. It's a way to diversify crypto investments. It's not a trading platform. It's not an exchange. It's a way to invest in a diversified allocation of crypto assets, which is what people are really starting to look at. What is it? 2034, the Social Security fund will no longer be generating returns. So people are going to be getting back less than they put in. That's outrageous. So people need to find other ways to invest long term, and pension plans are a thing of the past, and Social Security is going away, and people are looking to this asset class as a way to invest in the long term, and they need a safer way to do that. So that's why we launched Makara.
No, appreciate that. And I'll give Moish maybe a minute to think about the same question in terms of GK8 and reasons for it to launch. But if people have questions, feel free to put it in the chat, and then we can pick it up. We are almost coming to the end of the hour. But Moish, back to you in terms of GK8. How did it start? What were your motives, and how did you navigate the challenges that organizations face?
Well, our company started in Israel and co-founded by people who worked in the Israeli Prime Minister office, protecting and also in the hacking world. And the co-founder actually were able to hack one of the most protected solution that was out there back then, 4 years ago in the market. So we understood that there's something big here, and we wanted to be part of this revolution, and of course, being the good side of protecting people and financial institutions. And we developed something that is truly unhackable because it's off the chain, off the grid, air gap completely. And this is how we started. And for me personally, I grew up in finance, also investing, and I always had passion for innovation, and crypto especially caught my eye. So I thought it would be the perfect place for me to join. And GK8 as a company just growing rapidly. I'm sure we will help bring the impact from security perspective, and hope to see you again.
No, perfect. Thank you so very much for those responses. I'm hoping everybody in the audience definitely found value in this. I'd like to also thank Baker Tilly for providing us the streaming platform in terms of sharing these points of views. Got 2 minutes ended. Hopefully this was a good conversation for everyone. This is an exciting asset class, at least from my vantage point. It's at the right intersection of finance, evolution, innovation, and the future of money. And there are lots of risks that come with engaging in this asset class. We've touched upon a few of these today. There are lots of solutions available in the marketplace as well, in terms of being able to comply with the law from the right vantage point, come up with unique ways to interact with these asset class and provide ways to your employees to do that, as well as thinking about it in a different way. And we touched upon some solutions that GK8 and others might also be able to think of. So hopefully this was a great webinar for everyone else. On behalf of everybody from the organizing committee, thank you for joining us for this hour, and we hope to hear from you soon. Take care. Thanks, guys.
Thank you.
Thanks, everyone.
Bye.